Hello, my name is Michael Allman, and I'm a financial advisor with Patriot Asset Advisors. And today I wanted to talk about inflation and protecting your money's future. Have you ever noticed that things cost more than they used to? I remember as a child, I read a book called Whatever Happened to Penny Candy. While the book itself covers a wide range of economic principles, it primarily discusses inflation, where once you get a piece of candy for a couple of cents, now you can't seem to get from any gas station for less than $2. Why is this the case though? Well, it's due to inflation and the rising costs of goods and services. Today, though, we're going to talk about how to fight back inflation. Now, inflation is simply the rise in cost of goods and services over time, resulting in less buying power. The value of money goes down over time as goods and services continue to rise in their cost. Something that costs $100 today, even at 3% inflation, will cost $180 in 20 years. The reality is, if your money isn't growing faster than the rate of inflation, then you're falling behind. Now, in retirement, inflation can be especially dangerous. You're living on a fixed income. You're not growing the amount of money that's coming in typically from one year to the next. But the cost of groceries, healthcare, housing, all continue to grow at the rate of inflation. As we saw in our 20-year inflation example of $100 to $180, is your monthly income able to absorb an 80% increase to expenses over the course of your retirement? If you're not planning for that, your lifestyle could take a big hit. Now, the good news is there are several strategies that we use to combat inflation. Number one is investing for growth. As we continue to age and as we continue through the course of our retirement, it's a natural inclination to want to preserve our wealth and protect against any type of loss. Typically, as you near retirement, you'll see an increase of your portfolio allocation of bonds in order to preserve that wealth and to have a safety net. Cash feels safe, but it loses its buying power year after year. If you were to convert your entire portfolio into cash, you would never be able to outpace inflation. Growth investments, like stocks, have traditionally been able to outpace inflation over the long term. Second, we can diversify our income streams. Rental income, dividends, and side ventures allow for an increase of cash flow that you otherwise might not have been seeing prior to retirement outside of the existence of your normal portfolio. And finally, we need to review and adjust regularly. Inflation isn't steady. It rises and falls month over month, year over year, some years having greater increases than others. It's important to have the conversations with your financial advisors about where your finances are sitting and whether or not we need to make any changes in order to keep pace with inflation. Inflation isn't going away, but with the right plan, you can stay ahead of it. We can help to protect your buying power and your future. Visit our website for a free retirement readiness checkup, and let's build a plan that works for any economy. Yesterday was the best time to invest, and today is the next best time.